Hello there, this is fairbinaryoptions.com, and I would like to discuss here the US dollar and Canadian dollar, as I really like to sell the pair. Or in terms of binary options like we have here, I would like to go and actually buy put options. However, not from this moment of time, as we had on the US dollar Canadian dollar some tricky insights in the last, let's say, in the last days. Now Friday we had the CPI, or the Consumer Price Index that is being called in Canada, and the CPI came favoring, let's say, the Canadian dollar, as it is somewhere around 2%, and the pressure for the central bank to hike the rates started to mount. However, if you look at the PMI and what it means for the whole Canadian economy, things are not that pretty, so I don't think that the central bank will actually go into act. However, on the technical picture, what we have here is a possible rising wedge that ended, from my point of view, around this moment of time. So this to be the rising wedge, the 1, 2, 3 to be this one, then the 2 to 4 trend line to be this one, the rising wedge being, but the break to that, you can see it is being three-way structure, A, B. So this is a three-way structure. Therefore, what we should do is to measure from these lows to these highs here, and because it is a three-way structure, that means that we need to the upside price to go minimum 61.8 in order to form the B wave. So this to be wave A to the downside of the newly started wave there that began around 108. So this would be wave A, let's say, out of this degree. A B wave to the upside that go more than 61.8. We said why? Because if you have a three-way structure for the first corrective wave A, B, C, then it's mandatory to be a three-way structure for the B wave and to be more than 61.8. Now we need then a Fibonacci retracement from the highs and to the lows here, and the 61.8 we see that is coming actually at 107.61. Well, that would be the place that I would like to go and buy call options. 107.60 put options, sorry. I would like to buy them to the downside on the first instance. However, it might be the case that the move that started from here to here, that is minimum for price to go. That the move that started from here would be an irregular flat, and that means that the highs here to be broken. There is very much possible. So this is minimum to come. So normally I would go with the following scenario. I would go with 108.30, which would be 61.8 retracement on the bigger degree for the whole move, and then I would divide this level from here and to the 61.8. Let me change the color for it like this. Let's make it blue, and then let's move this one here to 61.8 like this. As you can see, the highs here almost fall in the middle. Now I would like to go and split the amount to be traded, or the invested amount, into three different parts. So I would like to trade put options right here when market goes more than 107.61 with end of week expiration date, so for this Friday. Then I would like to deploy another put option basically when the market goes 107.90 area, and then another put option when the market goes if the market goes, let's say, 108.20 area, something like that. So three different places for the retracement on the US dollar Canadian dollar, put options to be with end of week expiration date. So three places in which looking to buy put options with end of week expiration date. So that would be 10760. Let's say 10770, 10790 area, and 108 let's say 20 area. That would be enough for our setup of trading a B wave over possible flat. So A, B, and then to look to the downside quite strongly. You might ask, all right, why not buying call options here? Because choosing the expiration date here is quite tricky. I mean, I would choose today end of day expiration date for some call options, but it may be that the market goes, spikes higher 61.8 and then reverses aggressively, and that is a risk that we cannot mitigate. Therefore, we'd stay with this analysis. Thank you for being here, and let's see what the markets are actually going to do. Thank you and bye-bye.